Pankaj Pandey from ICICIdirect to chat about what his take on the market and specific stocks and sectors is. And Pankaj, just looking at the price action on some of the stocks yesterday, Godfrey Phillips along with ITC, these had a news-based peg behind the move that we saw on the stock prices. Godfrey was the top gainer on the small cap index. The stock rose after the government chose to ban e-cigarettes altogether. The volumes were the highest in a month, about almost 7.2 times the last 5-day averages. Do you think there is merit in perhaps increasing allocation to Godfrey or an ITC?
Hi, good morning, Aisha. I think within the cigarette pack, if you look at largely one fear of disruption was coming from e-cigarettes. That has been the case globally because the pace of growth of e-cigarettes have been quite substantial overseas. So that had some bearing on the Indian markets as well. I think one of the concerns now with government putting a ban has been sort of put to rest. But I think another concern for stocks like ITC is that the EBIT growth for the cigarette business continues to be mid-single digits. And I think with the kind of aggressive taxation hike what the government has done, I think volume recovery could still take time. So we don't expect a big sharp spike in something like ITC, which is trading at about 21 times on a forward basis, although it looks far attractive. But I think from current levels, I think one of the downsides have been sort of limited. So which is why from a measured perspective, I think one can look at buying these stocks, especially ITC, from a 2 or 3 year perspective.
Sure. Hemant, what do you make of the move that we saw? Okay, Pankaj, sorry, what do you think of the move that we saw in the metal counters yesterday? It was fairly strong, I mean, across the board. Would you read anything into that, or do you see it as a temporary phenomenon?
So I think commodities, if you look at, has been sort of swinging both sides for quite some time. And largely, I think the outlook would depend on how the trade war sort of pans out. Off late, if you look at, there has been correction in ferrous metal prices or steel prices and other non-ferrous prices as well. But the challenge still remains that, because of slowdown in auto, the inventory levels are still higher for steel players. And for past 2 quarters, we have seen EBITDA per ton declining for most of the players. So which is why we have seen a good amount of beating for these stocks. So I think till the time you don't see much of a resolution on trade war, I think all these are trading bets only, and one should not be really sort of picking them from a portfolio perspective.
Pankaj, I'd like to draw your attention to a stock which we don't discuss, and that's Kotak Mahindra Bank. Expensive yet not falling. If FIs are selling, they'll sell what they own, and my sense is they own a heck of a lot of Kotak Mahindra Bank, but right now they're selling HDFC Bank and not selling Kotak Mahindra Bank.
So, Nikunj, if you look at Kotak Mahindra Bank has been pretty stable of late, despite whatever correction what we have seen. I think market is clearly looking at a divide between ordinary business and quality business. Now, in Kotak Mahindra Bank, largely you haven't seen any kind of a negative surprises. Compared to that, on the HDFC, if you look at, the growth rate has been sort of lowered a bit, which is where a bit of a discomfort is coming. And plus, they've got a good exposure on the auto side. Auto, we know that, or we understand that, or our sense is that it is in a sort of a structural challenge the entire industry is going to face. So from that perspective, the growth outlook for HDFC Bank is slightly muted, though they will still be delivering industry-leading growth. But compared to that, on the Kotak side, largely they've got a fairly diversified book, and we haven't seen any kind of a quality issue. So from that perspective, whatever we have seen across segments, I think the quality businesses are getting even more premium.
Okay, so give me one quality business where optically prices are high, but you would say it's worth it.
So for example, you look at the case of FMCG. In FMCG, Nestle is the costliest stock, trading at about 54 times forward. The rest of the pack is trading somewhere between 35 to 50 times, with something like Colgate trading at 35 times. Now, with Nestle, the good thing is that the company is going to grow at 9-10% in terms of volumes, and largely the portfolio is urban. What we have seen is that with the good monsoon, the farm product prices have been sort of slightly muted. So from that perspective, rural beneficiaries have not benefited to that extent, whereas this company has been delivering a better set of numbers. So, which is why something like Colgate may not have done that great, but something like Nestle has been sort of doing very good. And I think this stock again is a good pick, given the fact that the kind of products what they have been launching and the kind of success rate which they have got in the last 3-4 years. So from that perspective, I think within sectors also you are seeing that kind of shift.
What's your view on Bharti, Pankaj? Talking about significantly reducing its debt, we have started to see a bottoming out there, with regards to Bharti trying to get its books in order. But what's your view in terms of the long-term potential?
So Bharti within large caps is offering one of the best risk-reward potential. I think the downside seems limited, given the fact that we believe that the telecom market will be a two-player market eventually, because Vodafone Idea looks challenging from the overall debt perspective and even the kind of numbers what they've been delivering. So last quarter for them, the EBITDA declined from 1,500 crores per quarter to 1,200 crores. Compared to that, Bharti has been sort of delivering decent set of numbers. Their volume, there was a quarter-on-quarter growth in their overall turnover. So they are a fairly good competition, and I think going forward, the pricing, so we still don't know when this price intensity would sort of come down. But I think they are far more better placed in terms of competition, and I think we haven't seen much of a price performance. So as and when the sort of price intensity or competition intensity declines, I think this stock will be one of the biggest beneficiaries, and we have recently added to our portfolio as well.
Pre-open rates, and in the pre-open session, it is clearly evident that we could be staring at more weakness. If you're a bull, you are hoping and praying that crude comes down and the FI selling actually reduces. Frankly, strength in crude in last decade has not really hampered emerging market growth, because the strength in crude in the last decade also coincided with the big economic expansion in China. That's the point I'm saying, that don't make your market view purely based on crude. You can make your market view based on what's happening to Indian economy, what is happening to interest rates, where demand is headed, what is happening to auto. I think to make a view and get bullish or bearish just because there's a spike in the crude, I think would be too naive. Crude prices will come down because crude demand is not as strong as what it was in the last decade. China is consuming less, India is consuming less, EV is here to stay. China, about 20% plus of the vehicles on the road are poised to become electric cars very, very soon. New car registration in China, 1/3 actually, going to the EV space. So a lot of disruptive changes have happened in the oil market, which is the point we are trying to bring out on a daily basis. In the SGX, in the pre-open session, I would also like to check where some of the oil marketing stocks are, some of the aviation stocks are. They, in a sense, are important in terms of the mood. They are important in terms of the trend. Pankaj, let's keep the ban on e-cigarettes aside. I mean, they hardly account for less than 1% of the market, so they will not nudge the needle for a ITC or Godfrey Phillip. Let's look at ITC independently. There is a new man at the helm now. They're trying to do the right things in the FMCG business by shutting down some of the non-core businesses, yet markets are not recognizing that. Do you think ITC will continue to suffer and will continue to remain subdued because of its tobacco business? Because globally now there definitely is a movement out by fund managers that they do not want to invest in tobacco stroke non-ECG businesses.
So I think, Nikunj, in ITC there were two major challenges. One, because of aggressive hikes by the government, the company volume took a hit. And so that was one concern, because volume growth will take some time to sort of recover. The other concern was that globally this sector was getting disrupted because of e-cigarettes. I think one of the concerns yesterday has been put to rest. But I think the other concern still remains that the volume growth might take some time to sort of pick up. We were also anticipating that the government might do something on the BD segment, which is a sort of untouched segment. So till the time your EBIT growth for the cigarette business remains in mid-single digits, I don't see a meaningful bounce in the stock. But yes, I think the kind of valuation it is trading at, so it is trading at about 21 times forward basis, which is quite attractive. So a bit of a positive movement can happen, but then again, I don't think this company is going to yet perform the overall FMCG as a pack. Because even for normal other companies also, the volume growth is 4 to 5% and so I think, so which is where the challenge is. So though one of the concerns have been put to rest, we would expect some upside, but not to the extent of this outperforming the entire FMCG pack.